Welcome back to Midas Letter Live. My guest this segment is Matt Bottomley. He's the research analyst with Canaccord Genuity. Matt, thanks for joining us again.
Thanks for having me back.
Matt, recently Chuck Schumer, senior Senate Democratic senator, tabled something to repeal the national prohibition on cannabis in the United States. I'd like to start the discussion with what would that do for the institutional mindset towards investing in Canadian companies with marijuana operations in the United States?
Well, yeah, I mean, it's a difficult question in terms of what the overall mindset is when there's a lot of moving parts in this industry. So I would say clearly it's a net positive. There's a number of actually what I would call de-risking points or data points in the last number of weeks even. We've had Boehner, the former Speaker of the House, has joined a U.S. cannabis company as a director. Allegedly, Trump as well was speaking with the Colorado Senator Gardner with respect to potentially not, or giving some assurance that they're not going to be enforcing federally, that is.
Maybe Trump will start a marijuana company.
You never know. That could be the next thing. And yeah, just the other day, obviously Chuck Schumer's announcement is another one of those data points. I know another senator out of New York, Cory Booker, had a similar legislation as well that's been tabled. But I think you have to look at the composition of the House and the Senate in the U.S. And really, I think the midterm elections this November is really what the catalyst could be. If it gets more favorable towards having a higher proportion of Democrats, that can push these bills forward. Because I think there's a very, very large overhang already with potentially jumping into these names because of the federal restriction. So institutional money, I think, even at the Canadian licensed producer level, I think there's some on the sidelines right now, just sort of feeling out how that might play out in the Canadian market. So it's even more so when you look at investing in the names that are U.S. operators but Canadian listed. So I think that we need to see more and more data points like this over the months and maybe, unfortunately, years to come. But I think, obviously, the genie's out of the bottle, as they say, with respect to cannabis reforms in the U.S. And I think it's a matter of time where it continues to de-risk and we see institutional money come in, more retail money come in, and we see valuations, particularly in the U.S., start to re-rate relative to the Canadian licensed producer.
Okay, so at this point, though, institutionally, Canaccord has already demonstrated a degree of risk tolerance for U.S. operators, and that's reflected in your participation. You published some research on iAnthus, I believe?
Yeah, so I cover personally about four, what we'd say are the U.S. operators listed in Canada on the Canadian Securities Exchange. And right now I probably spend a good half of my time, if not more, doing due diligence on these types of opportunities, because I think it's, like I said before, a matter of when this de-risking is going to happen, because you have way too much tax money already coming in the states that have it. 65% of Americans support recreationalized cannabis. We have a number of bills. The Schumer bill and the Booker bill are one of maybe a dozen that are actually sitting right now between the House and the Senate that really aren't getting any play just because it's Republican controlled. So I think that there's a lot of de-risking that's going to happen. It's an eventuality, and so iAnthus is my top pick in all my coverage, because they happen to have just as much reach as many of the Canadian licensed producers do. They're sharing sort of a pie right now of 35 million Canadians. iAnthus, in the states they're in, it's predominantly Massachusetts, New York State, and Florida. I mean, if you add that up, I think it's close to 50 million. In the U.S., you also have vertical integration, which you're not going to get in Canada. LCBO, SAQ, and the like are going to be taking a lot of the margin. So, there's many ways to dissect what the risks are and what I like about those opportunities in the U.S., but that is where I'm spending a lot of my focus currently.
Are there any other Canadian companies operating in the U.S. that you are particularly attracted to?
So for the most part, there aren't any. There are many Canadian companies that have exposure on the CSE. That's modest exposure. They might have some licensing agreement with getting into maybe storefronts down the road. But when you're looking at your bread and butter Canadian licensed producers that are largely capitalized, that are probably going to get a good amount of market share to start. These are the Canopies, Aphrias, Auroras, MedReleafs. I mean, none of them have U.S. exposure because they're all listed on the TSX or Venture. Most of those larger companies are probably going into the index in the medium term as well. Some of them already are. So I don't expect there to be any U.S. exposure for those Canadian licensed producers really anytime or anytime soon.
Okay, so then in the Canadian landscape, what are your favorite companies in terms of those that are more representative of opportunity because they've got more growth ahead of them, as opposed to those that are more mature and perhaps fully valued?
Yeah, so that's a great question, because not every licensed producer is the same, but we're still starting to see, on a day where there's a lot of speculation or a lot of fanfare, all the names kind of trade up significantly or trade down. So it's speculative by nature. Expect volatility even going forward. But I think that not every licensed producer has the ability to achieve, or at least have the potential to achieve, the same fundamentals across the board. I think that's what's becoming more topical is international opportunities. So we're starting to see Germany begin to regulate its process, and admittedly it has faced some delays as of late, but there's Australia, there's companies that are putting joint ventures and operations in Denmark and Spain and Italy, and there's obviously a lot to take in on that. It's sort of speculative on top of speculative, what I would say, but it's there, and Canadian licensed producers rather really are leading the pack with that. So I think I like to look towards companies that have an existing position in Canada, where I think they're going to get a large order from Ontario when the LCBO or CCBO is going to implement that is going to have a leading edge when it comes to its medical strategy to continue selling to maybe a Shoppers Drug Mart or other pharmacy chains, and has boots on the ground internationally. So I'm happy to get into some names with you, or however you want to take it. But
what would be your favorite Canadian company that has boots on the ground internationally and is going to get a big chunk of the Canadian market share?
So for me, it's Aphria, and the reason for that is it checks all those boxes. But I think when you look at the volatility in this market, when you look at the absolute valuations of sort of the top tier groups, and when I say that I mean by infrastructure built, by market capitalization, by current run rates, they really are jockeying for position. By all means, I think Canopy probably is the leader in the space when it comes to its ultimate size and scale, and how it's been able to brand itself already. As I think anecdotally, when I talk around to people that aren't entrenched in the industry, everyone knows the Tweed name. But with an Aphria, you're getting that same exposure at sort of 1/3 the valuation, and I love the relative valuation on it. I think they probably have the best international exposure with their recent acquisition of Nuvera, and I fully expect, I don't know if Ontario is going to release their purchase orders as specifically as Quebec did, where they sort of said, here's our top 6 and here are the numbers, but I fully expect the Aphria and the Aphria of the world, similar competitors, to get very large chunks of those markets too.
Okay, so Aphria is making some pretty aggressive moves with the acquisition of Nuvera, et cetera. Are there any other Canadian companies that you think are really worthy of paying attention to for the investors that have the potential to make big moves internationally? Yeah,
I think another one would be a MedReleaf. I think MedReleaf, from their last earnings call, is in 6 or 7 countries now. They haven't disclosed specifically as much, but that's very typical for how management likes to communicate in press release. They probably keep it a little more close to the vest. They secure things full right, and then it'll go to market. So I think that's consistent with management's historical way of communicating, but I do know, I've done my due diligence in terms of covering them, and I do think that there is a lot of good opportunities, particularly in the German market, potentially Australia as well. But really, them and Aphria, in my mind, are the 2 companies that, even if you ignore the international side, it's very easy to follow and telegraph where they are in their construction build-outs. What's the revenue run rate going to be next quarter? They press release things in a way where, if you're an investor that follows them, I don't know if conservative is the word, but it's certainly they telegraph what they're going to execute, and then they execute on it. So I think that there's a large, or at least a slight premium, depending on your risk tolerance of what you should put on that. And I definitely have a lot of faith that they're going to continue to execute, and I think international is included in that discussion.
Matt, you are a wealth of knowledge and information. Thank you so much again for your time. We'll have you back as soon as we can. Thanks for joining us today.
Thanks for having me.